I'm being gifted a house from a family member, and I'm just curious of the tax implications. I'm not sure what I'm going to do with it yet. If I'm going to, renovate it and sell it. So if I sell it too quickly, I would probably get hit with a lot of taxes, right? Should I wait a year?
Well, a couple of questions for you here. One, first of all, when was do you know what the cost basis is in the person who's giving it to you? What did they pay for it when they bought it? Do you know? Think a long time ago?
They inherited it themselves. But I believe the original cost basis was about $125,000, but it's going for close to $500,000 or $600,000 now.
So if the original cost basis is, just for easy numbers, let's say $100,000, just to give people an understanding, when that's given to you during life, right? So this individual is going to make a lifetime gift to you. You are stuck with a $100,000 cost basis because that was that giver's cost basis. It's a carryover cost basis. So if you were to sell it for $500,000, then you would have a $400,000 capital gain, roughly 28.8%, call it 30% federal and state capital gains tax combined. So, 4 times 3 is $120,000, a little less than $120,000 in capital gains tax. So that's why I don't love giving away assets while the person's alive, because it really sticks the individual who got it with the gain. Now, your question was, well, if I wait, I'm going to get, if I sell it now, I'm going to get stuck with this tax. And if I wait, maybe it'll get better. No, if I wait, it'll get worse, right? Because maybe if I wait 2 years, now my house is worth $700,000, but I'm still stuck with my $100,000 cost basis. Unless, of course, you put capital improvements into it. You put a new roof on, new kitchen, new bathroom. You can add those expenses to the basis, and then that will help you reduce the capital gain. But again, you're fighting, fair market value increases, because as you add money to the house, it increases the value, so it might be a wash when it comes to what the capital gain is that you have to pay. The only comment I might have for you is if you move into it and you own and use it as your primary residence for 2 years and then sell it, now you will have if you're single, you will have a $250,000 capital gains exclusion. So if it was sold even in 2 years for, let's say, $600,000, and you're still stuck with a $100,000 basis, you've got a $500,000 gain, but a $250,000 exclusion. Now, it might get better. I don't know anything about you. If you're married, and this is just helpful for anybody listening, if you're married and you move into this house that was gifted to you, and you live there for 2 years, and then sell it, and it sells for 6 minus 1 is 5, you would have a $500,000 capital gains exclusion as a married couple, thereby eliminating your capital gains tax altogether. So lots to think about on your front in terms of what you want to do with that property. Now, what I'm going to tell everybody is don't do this, right? Giving away assets like this, especially low basis assets, is never a great idea because of this capital gains problem. Now, if the individual decided to set up an estate plan, use one of these trusts that are in the guide perhaps, and carve it out to say that when, I die, or whenever the person is that created the trust dies, I leave this property located at XYZ to Doug. Okay, well now, Doug, when you get it because somebody died, excuse me, you will get it with a brand new basis equal to fair market value on the date of death. So if when this person dies, it's worth $700,000, your basis is $700, you sell it, zero gain. Folks, lots to think about when you're making a gift. Don't just give away your assets.